Hi, I'm Vidhi Chheda, a chartered accountant, and today we are going to discuss a very important topic. This is for ACCA skill level, that is financial reporting paper. We are doing a very important topic, which is revenue. Now, obviously, when we talk about revenue, it means that we are talking about our earnings. As an entity, your source of earnings would be sale of goods or rendering services or combination of both. So if I am a seller of a computer, then for me the goods become computer. If I am providing services to my client to whom I sell computers, then I am providing technical support services to the client. Whatever it is, sale of goods or rendering of services, I do whatever to earn revenue. Sometimes the seller may sell only goods, sometimes the seller may provide only services, or there could be combination of both. This standard will help us or guide us to understand when is the time the seller is going to record revenues. We are going to identify all the principles which are given by IFRS 15. So in IFRS 15 there are fundamental 5 steps which are given, wherein the seller is going to identify these 5 steps, and based on that only he is going to recognize revenue. The entire concept revolves around when to record your revenue in your financial statements. So starting with the first 5 steps based on which the entire standard has been framed. The first step is to identify the contract. So what I mean is, there will always be two parties, the seller and the buyer. There should be an agreement between the two parties. There should be a contract. The agreement can be written, the agreement can be oral, or it could be just a business practice. We are going to discuss each and every step in details. But fundamentally, we are going to identify the 5 steps which we are going to cover in this entire chapter. The first step is to identify the contract, which means there should be agreement between the seller and the buyer. Once you identify the contract, we proceed to step number 2. Step number 2 is to identify performance obligation. Whenever there is a contract, the seller promises the buyer that he is going to provide goods, or he is going to provide service, or he is going to provide both to the buyer. So whenever there is an agreement, once the agreement is identified, you will have to identify what is the performance obligation. In simple words, performance obligation means the promise of the seller to the buyer to provide goods, services, or both. Once we finish step number 2, we come to step number 3, where we determine what is the transaction price. Suppose this particular device is available for 1000 rupees in the market. But when I go to the seller as a buyer, the seller provides me 10% discount. So for me, the transaction price will not be 1000, rather it would be only 900. Transaction price is that price for which the transaction will take place between the seller and the buyer. Okay, so once we identify the contract, we go to step number 2, where we try to identify what is the performance obligation, I mean what is the promise between the seller and the buyer. Third step, what is the deal between the two parties, what will be the transaction price, because there is always a monetary consideration involved. Third, after we determine the transaction price, we need to allocate. Supposing there is a combination of goods and services which is being provided by the seller to the buyer. There is one price which is paid by the buyer. But as a seller, you will have to identify what part should be allocated to goods, what part should be allocated to services, or whatever is the deal. Okay, so after determining the transaction price, we need to do the allocation of transaction price. For every step, there is going to be a detailed discussion. Okay, and the last one. In the last one, we need to record revenue. This is the timing when we recognize revenue in our books of accounts. Now this happens only and only when the performance obligation is satisfied. मतलब अगर सेलर ने गुड्स प्रोवाइड किया है, जैसे ही सेलर ने गुड्स प्रोवाइड किया है, द सेलर कैन रिकॉर्ड रेवेन्यू. सेलर ने जैसे ही सर्विस प्रोवाइड की है, आफ्टर प्रोवाइडिंग द सर्विस, द सेलर कैन रिकॉग्नाइज रेवेन्यू. So I assume that you understood that this entire standard is based on from the point of view of seller. Okay, so quickly let's summarize the 5 steps. Yes, the entire standard is divided into 5 steps in details. We are just trying to understand the points that we have learned so far. The first one is the seller can record revenue only when he has identified the contract. There should be a contract. Step number 2, the seller will have to identify what is the promise, what is the deal, what are the goods or the services we need to provide to the buyer. Step number 3, what is going to be the transaction price between them. Once we identify the transaction price, we need to allocate the transaction price to the goods and services separately. And finally, the time when we record revenue is when we have fulfilled our performance obligation. Okay, let's take an example to whatever theory we have discussed so far. Here's an example for you. On 1st of December 2001, Wade receives an order from customer for a computer as well as 12 months of technical support. Now, clearly you can make out ये seller है. Wade is the seller. Wade has entered into an arrangement, agreement or contract wherein he is going to provide 2 things to the buyer. 1, computer, and 2nd, technical support, which is service. Wade delivers the computer and transfers its legal title to the customer on the same date. Very important. Here, Wade sells computer on the very same day of the deal, and on the very same day he is transferring the title, he is transferring the ownership of the goods to the buyer. The customer paid $420 on 1st of December 2001. The customer is making the payments on the very same day for the entire transaction, which means for the computer as well as for the technical support. The computer normally sells for 300 and technical support for 120, which means that if there is any customer in the market who only wants to buy the computer, then he will have to pay 300. 300 is the market price of the computer. If there is only one customer who wants only technical support, he will pay $120 for 12 months. This is the market price of the service. But this customer has taken combination of 2 things. One is the computer and other is technical support for 12 months. Let us evaluate the situation in the 5 steps that we just discussed. The first step is to identify the contract. Yes, here we need to identify whether there is an arrangement between the seller and the buyer. Clearly, yes, there is a contract. Now, this contract can be written, there could be a written contract, or this contract can be oral, or this could be implied based on business practices, business customs. Arrangement means agreement between the 2 parties, okay? There must be agreement between the 2 parties, wherein the seller agrees and the buyer agrees on the same terms and conditions, and once the agreement is whatever justified between the 2 parties, it becomes enforceable by law. Matlab, both the parties will have to fulfill whatever promises they have made under this arrangement. Once we identify the contract, we go to step number 2. What is step number 2? We means seller. Here seller is Wade. Wade needs to identify what is the performance obligation. मतलब promise क्या किया है? So here Wade has promised to provide goods. Goods means computer. Wade has also promised to provide technical support for 12 months. Right? So here there is a combination. The seller is going to provide the goods as well as the technical support to the buyer. So here seller's performance obligation is computer and technical support for 12 months. Okay. Once we have identified what is the promise that which the seller needs to fulfill, we go to step number 3. In step number 3, we determine what is the transaction price. Matlab, what is the deal between the seller and the buyer. So here, based on the situation, the transaction price is 420. The seller will provide computer and technical support to the buyer for 12 months. Computer only once, support for 12 months. The buyer will receive the goods and services, and in return the buyer will pay $420 for both the things. This is the deal between the seller and the buyer. Okay, this one was simple. Coming to step number 4. What will happen in step number 4? Once we have determined the transaction price, we will allocate the transaction price. Now when we were reading the case wherein we saw कि अगर कोई buyer होता जो सिर्फ कंप्यूटर खरीदने जाता, the buyer would have paid $300. अगर कोई दूसरा कस्टमर होता जिसे सिर्फ टेक्निकल सपोर्ट चाहिए for 12 months, he would have paid $120. So now we are going to allocate the $420 which we are going to receive from our customer. We will allocate $420 based on standalone selling price. What do you mean by standalone selling price? Their market price, the price which the buyer would pay for the computer individually or for the technical support individually. So for the computer, we will allocate $300 out of $420 received, and we will allocate $120 for the technical support. Now, when are we going to record $300 or when are we going to record $120? That we will see in the last step. Step number 5 deals with when to recognize the revenue, which means what is the timing to record revenue. We will have to identify 2 performance obligations, and based on each category of promises, we will conclude when to record revenue. In the first case, where the seller is transferring computer to the buyer, when the seller is transferring computer to the buyer, it is clearly given in the case that the ownership is also being transferred on the same date, which is 1st of December. So here the seller is giving up the control over the goods on 1st of December. So the seller can record revenue of this computer on the very same day, which is 1st of December. See, in step number 5, one thing is very clear. The seller can record revenue only when the performance obligation is satisfied, which means as soon as the promise is complied with, seller has fulfilled his promise, he has performed his obligation, he is absolutely eligible to record the revenue. Alright? There is other promise also wherein we are providing services over a period of time. The technical support will be provided for 12 months. Starting from December, Jan, Feb, March, April till next year's November. For all the 12 months, the seller is going to charge $120. So can I say per month he is charging $10? For every month he is charging $10, right? That way for 12 months he is charging $120. Sorry, $10, and so on, right? For every month $10. When the seller will provide service for the month of December, he can record revenue only of $10 and not $120. जितना सर्विस प्रोवाइड किया है बस उतना ही रेवेन्यू रिकॉर्ड करना है. Since you have provided service in the month of December only, you are going to record $10 revenue only for that month. In the second month, say January, after we provide service for the month of January, we will record another $10 as revenue. जितना सर्विस प्रोवाइड किया है उतना ही रेवेन्यू रिकॉर्ड होगा. I hope this part is clear to you. Now, we just had an overview of all the 5 steps. Now we need to discuss on every step in details. The very first step was to identify the contract, right? So when I say to identify the contract, there are several things which we need to consider. The very first point is that there should be 2 parties. Whenever there is a sale contract, there should be 2 parties. There should be one party who is willing to sell. There should be one party who is willing to buy. Step number 1, there should be contract between the 2 parties. Between the buyer and seller, there should be a contract. This contract can be a written contract. This contract can be oral contract, or it could be just based on business practices. Whatever it is, there should be a contract. I mean, there should be an agreement. There should be agreement between at least 2 or more parties. These agreement, whatever is decided, this agreement provides terms and conditions which make both the parties binding to the contract. Which means, if any party does not do the needful, the party can be enforced to perform the agreement, whatever was agreed between the 2. The terms and conditions are enforceable by law. It can be compelled by law. So when I say we have identified the contract, which means we have identified there is an arrangement between the 2 parties which could be in any form. This arrangement is such that which makes both the party binding to the contract, which is enforceable by law. Again, there are some 5 important requirements under this step. When we identify the contract, we first need to evaluate certain things. When we identify the contract, we should have identified whether the contract has been approved by the parties. The seller should agree and the buyer should agree. Both the parties should approve the terms and conditions of the contract. And once they approve, they should be committed to fulfill the terms and conditions of the contract. So there are 2 requirements. Both the parties should agree upon the same thing in the same sense, and once they agree upon the same thing in the same sense, then they should be committed to fulfill the terms and conditions of the contract. So very first requirement, whatever are the terms and conditions, they should be approved by both the parties. Also, they should be committed to perform their promises. Both the parties are committed. It makes them binding to fulfill the terms and conditions given in the contract. Second, rights of each party can be identified. What are rights? Seller has the obligation to provide goods or services to the buyer, for which the seller is entitled to receive a consideration, a monetary consideration. Similarly, the buyer is entitled to receive goods and services. So, if both the parties have agreed to fulfill their respective promises and obligations, they are also entitled to the benefits. The buyer is entitled to receive goods and services, and the seller is entitled to receive the consideration, right? So, both the parties' rights are established. Alright, then we need to identify what are the payment terms. Is it cash on delivery? Is it any advance payment that the buyer will have to make before the goods are processed? Or there is credit facility which is given to the buyer, or whatever is the arrangement. So when I talk about the contract should give you clarity on these aspects. One, both the parties should have approved the terms and conditions. Both the parties should be committed to fulfill their promises. And the rights of both the parties should be identified. And third, what will be the terms of payment? How the buyer is going to give the consideration? Will it be cash? Will it be credit? Will it be advance payment or combination of any of these elements? Fourth, there should be commercial substance. Example, when your mother cooks food for you, she does it out of unconditional love and care. In return, she doesn't ask for any money. There is no commercial substance. But when the seller is providing goods and services to the buyer, there is a commercial substance because the seller is expecting some monetary rewards from the buyer. So here there should be commercial understanding, there should be commercial substance between the two parties. If the commercial substance is missing, then we cannot proceed to step number 2. Example, a holding company is providing, we are a car manufacturing company. We have one division which produces tire. All the tires are used to produce the car. Here there is no commercial substance between division which is manufacturing tire, and there is no commercial substance between the division producing car, because the tires are automatically taken to produce the automobile. Okay, there should be a commercial substance, there should be some monetary rewards which should be expected from the buyer. And finally, probable collectability is certain. See, revenue can be recorded only when we feel the buyer is going to give us payment either today or in future. See, we will extend credit facility to the customer only and only when we are sure that he is going to pay us money in future. Probable means there is certainty that we are going to recover money from our buyer either today or tomorrow. If there is a question mark, or if there is any uncertainty or doubt with respect to collectability, we cannot record revenue. So when we identify the contract, we identify the terms and conditions between the buyer and the seller. These terms and conditions should give you clarity on these 5 points. First, both the parties should have agreed to the terms and conditions in the same sense. Second, the parties should be committed to whatever promises they have made. Their rights should be identified. Third, the payment terms should be clear. Fourth, there should be economic understanding, there should be commercial substance between the two parties. And fifth, it should be certain that whenever we are going to receive money from the buyer, wherever you are not sure that the money will be recovered from the buyer, you cannot record revenue. So when we did the 5 steps, we did a brief of it. Now we have just concluded with the first step where we identify the contract, wherein we identify the contract based on these 5 points. Okay.